and it was a 6.1% rate. And I was so happy for my buyer because I kind of told them, lock in the rate. You know, it was a new build, and the builder gave them the option of locking in their interest rates and also buying down some points based on how much they put down. And all that was done in the summertime. So they were able to get it at 6.1%, which was substantially high. They were apprehensive, didn't want to close the deal, didn't want to move forward. I said, go ahead and do it. If the interest rate goes up, you're saving. If it goes down, you just refinance. So either way, it's a win-win. Just go ahead and buy. If you are financially stable, you got your credit ready, just go ahead and pull the trigger, and you can always adjust based on how the market shapes out. So I was very happy when we closed, and they were signing a contract for 30 years at 6.1%. Looking at the interest rates now, 30, yeah, that's their first home. So the FHA is 7.54, but the 30-year fixed is at a 8.3. So they still came out good, being that they made that move, right? 30-year fixed VA is at a 7.5. So they got in at 6.1. So they saved about 1.5 points, right, on the interest rates. And that adds up when you're talking about a purchase. Like we saw, the average in Maryland is almost 490,000, right? What was the average? The median price in Maryland is 465. But no, the median price is 399. The average price is 465. That's always confusing at times. Here it defines the average sales is the price weighed average of sale prices in the country, calculated by weighing the price of homes by the number of homes sold. That's the average. The price of homes versus the number of homes sold. The median price is just the middle value of prices sold in that period. So the month of October, we're looking at 399, but when you look at nationally and everything, it's 465. So when you look at that kind of loan, a percentage point, you're talking a lot of money over time, right? So it's I'm happy they were able to get that 6.1 interest rate, which is still substantially higher than what it was a couple years ago when we were paying 2.3% interest rates. But just talking to like some people that I knew that were in the game into real estate a long time ago, they're saying in the 80s, this 7 and 8 was like the average. It's normal, you know. When you talk a high interest rate, you're talking about 15%. So the builder was saying they had a buyer who they were trying to not rush, but trying to tell them lock in the rate. She was like, I'm not worried. She's older, retired, just trying to build her retirement home. She said, I'm not worried. When I was younger buying houses, my first home, I paid a 15% interest rate. So for somebody that paid a 15% interest rate, 8% seems like a steal. So we are freaking out in this market, but really this was the norm for a long time. High interest rates were in the 15s, the 12s, and the 10s. So it's still not bad to go ahead and buy. You got the 30-year fixed VA. We talked about that already. The jumbo rate 30 years at 7.80 with an APR of 7.82. All right. So something that the elephant in the room that everybody knows, everybody has been talking about.